and visual check. Poll is going to launch on your screen in a moment. So if you can see and hear, if you could please respond, that would be fantastic. If you can see but not hear, please can you check that your computer's sound is not muted? Excellent. That's great. Thank you. I'll close that off now. Wonderful. Welcome and thank you for joining us this evening for the QBCC's Changes to Security of Payment Laws in Queensland webinar. Before we commence, I wish to acknowledge the traditional custodians of the land at each of the locations that we are at and pay our sincerest respects to elders past, present and emerging. My name is Regan Greer and I will be your webinar MC. I'll quickly explain how the webinar will run. Our presenters this evening are Kate Raymond, the QBCC's Assistant Commissioner for Services, Trades and Regulatory, and Megan Johns, Director of the BIFOLA Project. There are several hundred of you that have actually logged in to hear about the new and enhanced laws so that means you probably have a lot of questions. So if you do have a question, you won't ask it out loud. However, you can still ask it by typing it in at any time during the presentation. On the right-hand side of your screen, you'll see the task panel, and in there is a questions field. To keep the flow of the presentation going, we won't immediately stop and answer the question when it's asked. What we will do is continue on to the end, and we'll read out as many of your questions as possible and provide answers. If there are more questions than we have time to answer, what we will do is collate your questions, get them answered in writing, and we will email them out to all of you that have participated in this webinar in the next few days. And we'll also make it available on the website alongside a copy of a recording of this webinar. We anticipate that this presentation will run for approximately an hour. We have allowed for a little bit longer to answer as many of your questions as we can. As I mentioned, we'll record it and publish it on the QBCC website over the next couple of days. At the conclusion of this webinar, a little survey will pop up. We'd really appreciate your feedback on the presentation and your webinar experience today to help shape how we deliver information and education to you in the future. I will now hand over to QBCC's Assistant Commissioner, Kate Raymond, to commence this presentation.
Thank you, Regan, and welcome everyone. This evening, we'll be taking you through some of the new laws impacting the Queensland building and construction industry. We'll outline what BIFOLA means, as well as its background and an overview of the reforms. We'll then take a deeper look at the BIFOLA reforms and what you need to know about them and how to comply. Specifically, we'll look at a range of security of payment changes and other new requirements under the QBCC Act and Building Act. So in July this year, the Queensland Parliament passed the BIFOLA Bill into law. BIFOLA stands for Building Industry Fairness, in brackets, Security of Payment, and Other Legislation Amendment Act. It has made changes to quite a few pieces of legislation, including the Building Industry Fairness Security of Payment Act, or as we call it, the BIF Act, the QBCC Act, the Building Act, relevantly the parts dealing with building certifiers and the certification process, and there'll also be consequential changes to regulations under those acts coming. Dates for commencement of the changes and the new laws included in BIFOLA have been set by government, with many reforms due to commence from 1 October this year. Others, including project trust account enhancements, will apply from early next year. We'll discuss specific dates as we move through each of the reforms in coming slides. There's a number of words and phrases you might see and hear in relation to the changes made by BIFOLA. Some of these concern security of payment for subcontractors, while others address things like licensing requirements and building certification processes. Many of the changes under BIFOLA have come about as a result of law reform reviews, industry feedback, or state government commitments to the building industry. You might see mention of the BIF Implementation and Evaluation Panel, or Building Industry Fairness Implementation and Evaluation Panel. They reviewed the performance of the BIF Act since it was introduced in 2018. There's also the Special Joint Task Force, which looked into concerns of fraudulent behaviour in connection with subcontractor payments. It was the findings of these inquiries that resulted in many of the changes made by BIFOLA. It's not surprising then that the objectives of the new laws include ensuring everyone in the building industry is paid for the work they do. This is one of the overarching objectives of the BIF Act and the security of payment reforms, which improves the trust account framework and introduces a number of new protections. Getting paid is linked closely then to confidence, investment and growth of the building and construction industry. Underpinning this is the QBCC as a strong and effective regulator with the powers and oversight necessary to ensure everyone gets paid, that everyone complies with safety requirements and builders are financially sustainable. Both of these objectives reflect commitments made by the government to support the building industry in Queensland. I'll now hand over to Megan Johns to talk more about the security of payment reforms under the BIF Act.
Thanks, Kate. I'm now going to talk specifically about the changes to the BIF Act. As you would no doubt be aware, the BIF Act is the primary piece of legislation in Queensland underpinning security of payment. It currently deals with project bank accounts, progress payment laws, and the right to adjudication. From the outset, it's important to remember that many parts of the BIF Act and the security of payment laws apply more broadly than just building licensees. It in fact applies to everyone doing building and construction work and supplying related goods and services in Queensland. Many of you would be familiar with the payment process and some of the requirements under the BIF Act. We can see these listed at a high level on the screen now. It starts with the person who has completed the work or supplied the goods and services making a payment claim. The respondent, or the person who has requested the work, services or goods, either gives a payment schedule, and then by the due date, the respondent also paying the full claimed amount or the amount they stated in the payment schedule. Through BIFOLA, a number of new requirements are introduced which change or enhance these current requirements. The first of these is the introduction of supporting statements. Through BIFOLA, the government has introduced a new requirement for supporting statements to be given by some contractors with their payment claims. Other states, such as New South Wales and Victoria, already require supporting statements. A supporting statement confirms that all subcontractors have been paid, and if they have not been paid, provides reasons why. This is an important added protection for subcontractors. It now means the owner or developer for a project will know if subcontractors are being paid. This new obligation applies only to the first tier contractor who is contracted directly with the owner or principal. This person is sometimes referred to as the head contractor. The requirement does not apply where the contract is with a homeowner for domestic building work, and a head contractor needs only to give a supporting statement if they have subcontractors working for them. Of course, the requirement does not apply to subcontractors and others down the contracting chain. The supporting statement is included with every payment claim given in relation to construction contracts. Example templates will be available on the QBCC website, or you can use your own. There is certain information the supporting statement must include. If subcontractors have not been paid, you must include information about the unpaid amounts. This includes the name of the subcontractor, the unpaid amount, details of the payment claim, date the work was completed, and of course the reasons why that amount has not been paid. It is an offence not to give a supporting statement when one is required. A penalty will apply for not giving a supporting statement and can also apply if false or misleading information is provided in a supporting statement. Importantly, not giving a supporting statement does not make the payment claim invalid. So the person receiving the payment claim, regardless whether the supporting statement is included or not, must still take action to respond and pay. If you are a contractor who has not been given a supporting statement when you were expecting one, or you suspect that a supporting statement may be false, you may want to consider notifying the QBCC using our existing Notice of Offence form or NOOF form, which is available on our website. The next change we'll look at is the new non-payment offence. Through BIFOLA, there will be some enhancements to the existing payment offences. This change is one that respondents need to be aware of, as it relates to your obligation to pay what is owed and on time. The BIF Act already outlines the steps involved in claiming payment and the required response and payment obligations. As a respondent, your existing requirements after being given a payment claim are to either pay the claimed amount by the due date or give a payment schedule proposing a different amount and paying that amount by the due date. You should be aware that it is already an offence not to pay the full claimed amount in the absence of a properly given payment schedule. From 1 October, it will also be an offence if that scheduled amount is not paid by the due date. This change addresses an anomaly to ensure the offence applies to all situations of non-payment. As with the existing payment laws in the BIF Act, it applies to all contracts for construction work and supply. However, no specific action needs to be taken so long as you're already doing what is required, which is paying contractors on time. The existing steps that a contractor can take if they have not been paid in full and on time also have not changed. There are a range of options, including making an application for adjudication, suspending work, or commencing legal proceedings to recover unpaid amounts. QBCC can also investigate when the law has not been met and can take regulatory action against the offender. Fortunately, it can often be the case that debts are paid once the QBCC commences its inquiries. There are also several changes to the adjudication process and for adjudicators. For today, we will look only at the changes that the parties involved in the process need to know about. QBCC is running some specific webinars later in October for adjudicators. For those who don't know, adjudication is a dispute resolution process that can be used to help resolve disagreements about progress payments and money owed. There are certain steps involved in the process, and these are presented on the screen. When the parties are in dispute about an amount owed for construction work, the claimant can lodge an adjudication application with the registrar, who will refer the application to an independent adjudicator. They consider the matter and will make a decision about the disputed amount. The adjudicator will issue a decision which is enforceable in a court, and it's an offence if the respondent, if they're required to pay an amount and they don't pay that amount. There are a few small changes to the adjudication process. The first of these is a change to the definition of what is a complex payment claim. Currently for adjudication, there is a distinction made between standard payment claims and complex payment claims. There are different timeframes and fees that apply for adjudication applications made relating to complex payment claims. A complex payment claim is no longer exclusive of GST. This makes it easier to work out if a payment claim is complex because it is simply whatever the total amount claimed on that payment claim or invoice. Another change is to notices about withdrawal from adjudication. If a claimant is paid or decides to withdraw their adjudication application, the claimant, in addition to notifying the respondent and the adjudicator, which are current requirements, must also notify the registrar of this withdrawal. A penalty may apply if the registry is not advised of a withdrawal. These first two changes that I've mentioned apply to applications made after 1 October. The third change is a new requirement to notify when an adjudicated amount has been paid. If a respondent is required to pay an amount at the end of an adjudication process, they will now need to advise the adjudication registry when they have paid and also provide the registry with evidence to confirm that payment. The approved way to notify the registry is by email, stating the details of the adjudication decision and providing evidence such as a copy of the payment advice, bank transaction, or a statutory declaration. This change applies to decisions made after 1 October. Unfortunately, in some cases, the respondent does not pay an adjudicated amount. From 1 October, there are some new options to help the claimant secure payment after adjudication. Let's take a look at these now. BIFOLA introduces a new payment withholding request. This is an option for claimants who have not been paid after adjudication. A payment withholding request works by requiring the person or company directly above the respondent to withhold payment from that respondent until they have paid the adjudicated amount. We have a diagram on the screen which shows an overview of how the payment withholding process works. To start the process, the person who has not been paid, or the claimant, completes the required form and gives it to the hire party. A copy of this form is also given to the respondent at the same time. When given one of these forms, the hire party withholds payment from the respondent. This process safeguards the adjudication amount until the respondent pays the amount to the claimant. Unlike subcontractors' charges, it cannot skip or jump persons in the chain. But who is or who can be a hire party? The hire party can only be the next person above the respondent. It's the person who has contracted with the respondent and who pays the respondent under the contract. For example, if the claimant is a subcontractor and their payment dispute is with a head contractor, the hire party would be the principal or developer. If the claimant is a head contractor and their dispute is with a principal or developer, the hire party can be a financier. A hire party cannot be a resident owner, and a payment withholding request cannot be used against a resident owner. Sometimes it might be the case that the hire party no longer owes any money to the respondent. In this situation, the payment withholding request cannot be used. If the claimant doesn't know the details of the hire party, they can request information from the respondent. There is a template form on the QBCC website to help with this. It is an offence if the respondent does not give information when requested. So what does a hire party need to do after receiving this notice? The hire party withholds progress payments that are or become due after they are given the form, and they need only hold the amount up to the same value as the unpaid adjudication amount. We'll look at a few examples of this in a moment. If there is no money remaining on the contract between the hire party and the respondent, then the obligation does not exist to withhold any money. The hire party is, however, required to let the claimant know that this is the case. When the claimant is paid by the respondent, they must advise the hire party, who can then and only then release the withholding amount. There are serious consequences for a hire party who fails to comply with the payment withholding request. Whilst the hire party is protected by the laws from any recovery action taken by the respondent for the withheld amount, the hire party might be liable for the adjudication amount and subject to a penalty if they do ignore the payment withholding request and fail to withhold payment from the respondent. Now let's take a look at a few examples of how the hire party withholds payment. In this first scenario, the adjudication decision requires the respondent to pay $55,000 to the claimant, and this amount has not been paid. However, the hire party only owes $40,000 to the respondent under the contract. In this situation, the hire party must retain all of that $40,000 and pay nothing to the respondent until they've been advised that the adjudication amount has been paid to the claimant. In the second scenario, the hire party may need to withhold more than one payment, i.e. multiple future progress payments. So the hire party owes $100,000 to the respondent under the contract. However, the unpaid adjudication amount is only $55,000. The hire party must retain progress payments up to until that $55,000 is reached. So, for example, in month 1, the first progress payment becomes due of $25,000 and they'll pay nothing to the respondent. The same again in month 2. By month 3, there is only $5,000 required to reach the total sum of $55,000. So the hire party will retain $5,000, but then can pay the remaining $20,000 to the respondent. Then in month 4, assuming the adjudication amount still has not been paid, the hire party can continue to pay future progress payments to the respondent. Of course, at any time during those 4 months, if the respondent pays the claimant the $55,000, then all those amounts can then be released to the respondent. A few conditions, moving on then to charge over property. The second new option, which is available only to head contractors who have a payment dispute with a principal or developer, is to lodge a statutory charge over property. The charge over property registers the respondent's interest in the property for the adjudicated amount. It safeguards the money whilst they pursue recovery action for the outstanding payment. In effect, it prevents the registered owner from selling or dealing with the property until the charge is lifted. A fee applies to register a charge over property, which is done through the Titles Registry Office. It can only be used, as I said, by a head contractor owed money by the principal or developer, and only if the relevant property where the work was carried out is owned by the respondent or a related entity of the respondent. Again, properties owned by a resident owner are excluded. A few conditions also need to be met before registering a charge over property. The claimant needs to have an adjudication decision, and this needs first to be filed as a judgment debt with the courts. The head contractor then, using forms available on the Land Titles Registry website, lodge a request for the charge to be registered over the property. This form needs to be submitted to the Titles Office with a copy of the adjudication certificate and a statutory declaration stating the amount has not been paid. The charge needs to be released by the claimant if and when they are paid. Penalties may apply if this is not done. It's important also to note that a charge automatically expires after 2 years unless the claimant applies to a court for an extension. For example, if after that 2-year time period they are still not paid. One benefit of a charge over property is that the claimant is also entitled to apply to court for an order to have the property sold, and the proceeds from that sale can be used to satisfy the debt owing. It is, however, highly recommended that you seek legal advice prior to deciding to use this option. The final reform area under BIFOLA is for trust accounts, and there are changes to the framework for how trusts work. And also it provides for further rollout to cover more projects and more subcontractors. As many of you may be aware, the BIF Act introduced project bank accounts for the first time. These started in 2018. These trust accounts are important as they help to secure payment for subcontractors. They separate project funds from a contractor's regular cash flow, and they protect funds in the event a contractor goes insolvent or bankrupt. Recognising that PBAs was the first time trust accounts were used in Queensland for the construction industry, BIFOLA has made some fairly significant improvements to the framework for trust accounts, which, when the new laws start, will become known as project trust accounts, or PTAs, rather than PBAs. Unlike the changes discussed up till now, which do commence from 1 October, these trust account reforms do not commence until next year. Some of the changes include that only one project trust account will be required for each project, rather than the 3 accounts currently required. And a single retention trust account will be required for contractors holding cash retention. Many of the notifications and reporting requirements have also been streamlined, and QBCC will now receive those notices and have the primary oversight for trust accounts. Project trust requirements will apply to head contractors who have entered into an eligible building project, and some subcontractors if they are related entities to that head contractor. Retention trusts will be required whenever a head contractor also has a project trust and if they hold cash retentions. Principals other than state government principals, if they are holding cash retentions, may also need a retention trust account. And when fully implemented, subcontractors working on the project trusts and who are holding cash retentions may require retention trusts, meaning retentions will be protected right along the contracting chain when the reforms are fully implemented. Remembering, of course, that only one retention trust is required per contractor and can hold retentions across multiple projects. The new trust account requirements will be implemented in phases to more government and private sector building projects across a number of years. Eligibility for each phase is defined by who is the project owner or the principal and the contract price for the project. Of course, trust accounts are only ever required if there are subcontractors working on the project. As you can see from their slide, the first contractors affected by the next phase are those who currently or who intend to work on state government projects with a value of between $1 and $10 million. From 1 July 2021, that phase will be expanded with the lifting of the $10 million cap so that it will include state government agencies, hospital and health services with projects of $1 million or more. From 1 January 2022, we see the first phase of private sector, local government and statutory authority projects captured by the trust account laws. This applies to contracts of $10 million or more. 6 months later, that contract price will be lowered to $3 million projects. And then the final phase of implementation, 1 January 2023, will lower the contract price to that final level of $1 million or more. And as I said, that's full implementation. The new trust account laws, as I said, do not apply until that first phase of 1 March 2021. Until then, the current PBA requirements continue for certain state government building projects valued between that $1 million and $10 million. However, contractors who do open a PBA under the current laws will be able to transition over to the new improved framework when those laws commence. Further information will become available on the QBCC website as we get closer to that commencement date. Until then, contractors should talk to their government agency contract managers, or they can go to the Department of Housing and Public Works website or the QBCC website for more information. I have only covered trust accounts in a short detail here this evening. A series of detailed webinars will be provided over coming months and information progressively released on the QBCC website about trust account obligations. That brings me to the end of the content or the reforms on under the BIF Act. I'm now going to hand back to Kate Raymond, who's going to look at some of the other reforms under BIFOLA.
Thank you, Megan. Right, so moving to the QBCC Act, BIFOLA also implements changes to the QBCC Act, which start from 1 October 2020 for the most part. The changes to the QBCC Act are quite diverse. So they include site supervisor licensing, amendments. Site supervisor licensing has been tightened up. Some of the restrictions applying to contractors and nominees will now also apply to site supervisors. For example, site supervisors will now become an excluded individual if they're involved in an insolvency event, and also if they've been involved in a relevant event, they can also be excluded from obtaining a site supervisor licence under the reforms. Demerit points will start to be issued to site supervisors as well. Once they accumulate 30 demerits in 3 years, a site supervisor can be disqualified from holding a licence like other classes. Moving to non-licensees, for example, unlicensed company directors, this group is already able to be categorised as an excluded individual following an insolvency event. The process has been quite different to that applied to licensees. So under the reforms, there'll be a new show cause process legislated. This has already been the practice at QBCC for some time, but the process is now legislated in the QBCC Act. The decisions will also be reviewable decisions. And the QBCC will be able to publish the details of excluded non-licensees on its website. In relation to interstate and New Zealand licensing, changes have been made to increase transparency between jurisdictions. So there's new requirements for licence applicants and existing licensees to provide information about licences they hold in other jurisdictions, as well as any licence events such as suspensions or cancellations. These changes apply from 1 October 2020. From that date, there's changes to some of the QBCC licence forms. So persons applying for a new QBCC licence need to advise upfront if they hold any of these relevant licences of interstate or New Zealand licences, and continue to update QBCC of any significant changes to licences held in these other jurisdictions. Existing QBCC licensees will also be required to advise of any changes to their interstate or New Zealand licences, including if a new interstate or New Zealand licence is given or if an existing licence is suspended or cancelled. A new form will be available on the QBCC website, and that must be given within 14 days of those events occurring. Only for events that occur after 1 October. It does not apply retrospectively. QBCC also has a new power which allows it to share details of certain licensing actions with its interstate New Zealand counterparts. Moving to excluded accountants, the minimum financial requirements, or MFR, require that MFR reports are prepared by qualified accountants. Existing provisions in the MFR regulation have been transferred into the QBCC Act in this regard and expanded. The QBCC can already exclude accountants from preparing MFR reports. A show cause process has been introduced for excluding accountants from being eligible to provide MFR reports. Decisions to exclude an accountant will be subject to internal and external review. Accountants who've been excluded will be listed on the QBCC's website, and it's important that licensees ensure they do not use an excluded accountant, otherwise QBCC may require an MFR report to be resubmitted by an accountant who is not excluded. Also, prosecution timeframes have been extended. So for offences against the QBCC Act, QBCC will have an extra year in which to prosecute. So it'll be expanded to 3 years from the offence date, or 2 years from when the offence comes to the knowledge of the QBCC, whichever occurs later. Finally, it's now an offence to delay or obstruct compliance with a direction to rectify or remedy building work. This legislative requirement was introduced a couple of years ago, but BIFOLA has now made the contravention an offence. In addition, there is also a head of power for reforms to fire protection licensing, amending the definition of fire protection work, and there'll be more detail coming in regulations expected soon. Moving now to the Building Act amendments. I'll just cover these at a high level. For certifiers or anyone else interested in hearing more about these changes, there is another webinar on Thursday of this week specifically about these changes, and registrations are still open for this event. So some of the changes include the application of demerit points now to building certification offences. It's a similar process to what's currently in place for the QBCC Act. Once a licensed certifier hits 30 demerit points in a 3-year period, they can be disqualified from holding a building certifier's licence for up to a year. If they've already been disqualified in the past decade, the disqualification period can be up to 3 years. The details on which offences against the Building Act will attract these demerit points and how many demerit points is yet to come will be prescribed in a regulation expected soon. Updates to information about certifiers, including demerit points and any suspensions, will be included on the online register on the QBCC website in a similar way to how the information is reflected currently for QBCC licensees. When it comes to complaints made to the QBCC against certifiers, the process has been enhanced in 2 ways. Firstly, until now, there hasn't been any time limit for making a complaint against a certifier, so there will be a maximum of up to 7 years to lodge a complaint. And the second change gives the QBCC the ability to reject complaints that are frivolous, vexatious, or lacking in substance or credibility. There's also some changes in relation to accreditation bodies. So for consistency, accreditation bodies will now be prescribed in regulation rather than across the Act and regulations. Accrediting bodies will need to submit their educational and experience standards and professional development scheme to the Department of Housing and Public Works for review at least every 5 years. And the accreditation body must publish, accreditation standards body must publish on its website a copy of the current educational experience standards and professional development scheme. An alternative pathway for certifier licensing is also provided for in the BIFOLA Act. Currently, when certifiers renew their license or apply for a new license, they need to hold a current accreditation from an accreditation body. BIFOLA opens the possibility for government to prescribe another option to accreditation, an alternative pathway, which will allow certifiers to prove qualifications and experience directly to the QBCC. However, this has not yet commenced, and we're not expecting further details until next year on how this will be implemented. So it's not starting straight away, we're just flagging that this is a future reform. The public interest duty of certifiers has been clarified under BIFOLA. All licensed certifiers are held to high standards of professionalism and have long been required to act in the public interest when carrying out their work. BIFOLA has clarified this duty to always act in the public interest is a certifier's primary duty, and it doesn't create any conflict of interest with any other duties. There's a new option for property owners to request additional inspections by their building certifier. So these are extra inspections on top of the standard stage inspections normally conducted by a certifier. The certifier will be paid reasonable fees and can negotiate the timing of when the additional inspections are conducted, but they are required to do them, and there is an offence for not performing those. When any type of certifier is engaged for a project, there's notices that need to be exchanged between the parties involved in the building process. Under BIFOLA, the existing requirements have been expanded to address a wider variety of situations. So there's now a list of the obligations that apply to certifiers as well as to the owners and other clients and what they must provide within certain timeframes. You can find more information available on our website. Finally, there's been a couple of changes made to certification terminology. So instead of a certificate of classification, this will be a certificate of occupancy, and the term alternative solution will be replaced by performance solution. And this brings Queensland into line with the language used in other jurisdictions in Australia. So to summarise, we've covered many reforms this evening. To briefly recap, BIFOLA has made important changes for the building and construction industry in Queensland. The reforms introduce supporting statements to be given by head contractors with their payment claims. It's enhanced payment protections with new offences and penalties. There are improvements to the adjudication process, new enforcement options after adjudication for adjudicated amounts, a continued rollout of trust account reforms, now called project trust accounts, not project bank accounts, changes to QBCC licensing, and also in relation to qualified accountants and excluded individuals, and Building Act certification process changes. Many of the new requirements apply from 1 October 2020. Information, forms and templates are available on the QBCC website. If you have specific questions, you can contact the QBCC through the usual channels, which is our call centre, email, contact form online, or visit one of our offices.